Today, the US yield curve turns positive for only the second time since 2022. This time, it's actually a bear steepener. A bear steepener can have several implications. This is when bond prices fall when yields rise, so a bear steepener can be bad news for bonds. It can also mean that inflation potentially is on the rise. Economic strength. Well, a bear steepener can be represented of a normalization of the yield curve as the market recognizes economic strength. And a bear steepener can lead to a positive backdrop for risk assets after it ends. There was a lot of talk about a bear steepener today of the yield curve because the 2 and the 10-year yield curve inversion went positive, but now you're still negative about 1 basis point. And to be honest, who really cares about that? Because Tesla stock doesn't. Tesla is up 4% today with a massive outperformance. It's almost like someone knows something that we do not. Almost like Nvidia selling off 9% yesterday was followed by bad news, the DOJ antitrust subpoenas that were sent. It's almost like Tesla's 4% rally today off of really no news at all could be also telling us something, and we'll discuss that here throughout this video. What's actually most interesting about this move today in Tesla stock is we actually got bad news. Jolt's job openings came in lower than expected, showing really a weakening in economic activity and in the job market. And markets reacted to that. The S&P traded lower today. The NASDAQ, the Russell, they all traded lower today. Tesla had a really good day. Like a really, really good day, and there wasn't any definitive news behind this. Now, as I said in the last video, potentially there's a lagged effect between Wall Street understanding, Tesla news and retail investors understanding the news. For an example, over time, over the past, let's call it 6 months or so, there has been many instances where we've gotten news, like I've reported on the news, and the stock hasn't done anything that day. Then the next day, all of a sudden, it's like Wall Street woke up to the news when we already had the news. Some of that could be happening with some of the news that we got yesterday with the actually smart summon that Tesla started to roll out to all Tesla owners. And I do think part of this rally as well, if we're not going to get all tinfoil hat in this video, is also the data collection that Tesla is doing around the Warner Bros. Studio. It looks like, increasingly like, we could actually witness the first robotaxi ride, potentially the first paid robotaxi ride, coming October 10th. And then from there, you could potentially see a rollout of robotaxis and maybe a couple different cities. So I think there's reasons to be bullish on Tesla here. I think that could also be having a bullish, impetus on Tesla stock today. But other than that, there's really nothing that should be causing this move. And this is a standout day for Tesla. In fact, today, Tesla's breaking above its longer-term downtrending line of resistance, which is around 216, and Tesla stock closed above that. I mean, that's a really good sign for what is to come next. Yes, Tesla did get rejected at this 50-day moving average around $222 per share. And I think over the next 48 hours, the data is really going to determine, whether or not Tesla can do well in September and really even broader markets for that measure. Tomorrow, we're going to get quite a bit of economic data. We will start with the Challenger job cuts, expecting about 78,000. We'll see if that affects markets. Probably not. It's going to be at 7:30 in the morning. And then coming at 8:15 in the morning, we will get the ADP employment change, expecting 115,000 job ads. This is the private payrolls. It doesn't normally have a high correlation to non-farm payrolls because this data is a little bit better in my personal opinion. It tends to come in lower, and it tends to be less revised than the government data that we get. So I think Wall Street will pay attention to that, especially if it does come in low. But it's not going to dictate the markets tomorrow and generally how we trade. You will get initial jobless claims expecting 227,000. Last week was 231,000. Continuing jobless claims also expecting to inch up a little bit, about 6,000 claims from last week. Not a big deal there as well. ISM Services PMI is expecting the headline number to come in at 51.2. Last month was 51.4. So you are expecting a little bit of a slowdown for your services PMIs. Business activity expected to go from 54.5 down to 54, so weakening there. Services employment expected to weaken as well from 51.1 to 51. ISM services new orders expected to weaken down to 52.4. From 52.4 down to 52.2, and ISM services prices expected to weaken as well, which is good. That's the inflationary side of the services PMIs. Expecting that to go from 57.0 down to 56.7. So across the board, we are expecting some weakening in the services data. Any number above 50 is still positive. So if we get numbers that are below 50, which we're getting close to that, so that's a possibility, that's going to be seen as really bad, right? You don't want to see services go into contraction at the same time manufacturing's been in contraction for like 2 years now. That would not be a good outcome for markets. And that's all for economic data tomorrow. The services data is probably going to be the most important, but the ADP is also something markets will scrutinize quite a bit. Friday's your big data with non-farm payrolls. I've talked about this over and over again. Estimates are starting to come in now more, and it looks like we're only expecting 120,000 job ads for the forecast. Consensus is 160,000. I think markets are priced more for about 160,000. I think Goldman Sachs has their estimate at like 200,000. So estimates are high, right? Estimates are still higher than 120,000, what you're seeing over here. And we generally want to see a really good number. We want to see a number come in 160 plus thousand jobs. We also want to see the unemployment rate go down. So the consensus is 4.2% for the unemployment rate. We're at 4.3% right now, so that would be a drop. The forecast here says 4.3%. So the forecast is no change. The problem could be if we go up in the unemployment rate. That's where Wall Street is going to have a really bad September. Thus, I would expect Tesla would then have a really bad September. But judging off of what we've seen today, price action-wise for Tesla, on the charts, the technical levels that we broke that are so important to Tesla. Tesla trades around these technical levels very close, right? There's really no other stock that trades on the technicals like Tesla does. Like if you're a technician, if that's what you do is charts and you trade based on charts, there's no better stock to trade than Tesla. And the direct message you're getting today out of Tesla is, yeah, the stock is going higher from here. Which again makes things interesting because we do have this swath of economic data coming out over the next 48 hours. And depending on how that comes, if it's good or bad, that's going to have a large impact as well, which kind of leads me to believe that maybe there is some really good news coming for Tesla that we just don't know about yet. Maybe some folks on Wall Street are getting the news before we are, which, let's be honest, is happening all the time these days. Whether it's government data, whether it's company-specific news, Wall Street is getting it before we do. And this is such a large outperformance, you really have to take notice of it. But yet markets sold off into the end of the trading day today, which makes things that much more confusing. Because I was surprised markets even held up as well as we did following the JOLTS job openings, which were decisively negative for markets. Like, this was not good. This is a bad sign. For those in the soft landing camp that really the markets are trading off of right now, and we really didn't react to that at all. Did have some earnings today and after hours from C3AI, Hewlett Packard, ChargePoint, and Casey's. None of those are really important for the broader markets. Tomorrow morning, you have earnings from NEO, Fuel Cell Energy, and Toro. If NEO has good things to say over in China about demand, that can have a positive impact on Tesla as well. But yet we are already getting a lot of good data out of China. We're getting good vehicle insurance registration numbers out of China. Tesla seems to be doing pretty well over in China. Long story short, so even if NIO has negative things to say, I don't know how much of an impact it will have on Tesla. Now, for Thursday, tomorrow and after hours, you have Broadcom, UiPath, Samsara, DocuSign, Planet, Braze, Zoomies, and Smartsheet that will report earnings. And then Big Lots, Friday pre-market. Option activity today in Tesla stock is on the low side. You've seen 3 different trades totaling $360,000 with a positive order value of 35%. So think from a logical perspective, you really don't want to be short Tesla right now. I think the risk to reward doesn't make a whole lot of sense, especially if the jobs report does come in good on Friday. And I think the fear of a bad jobs report, I think the fear of a slowdown has kept Tesla stock in the low 200s. I think if you take some of that fear off the table with Tesla's Robotaxi event on October 10th, Tesla stock could really run here. And if there's not some kind of good news that we don't know about that is not causing this rally today, which is certainly possible, maybe it's just happening because a market maker woke up on the right side of the bed today and wanted to like Tesla. Who knows, okay? But if there's no reason for this rally, I would say the reason is the outsized risk to reward to the positive side. There's a much larger potential rally here, in my opinion, than a fall, right? Heading into October 10th with such a big catalyst on the near-term horizon, like, what are the odds the jobs report comes in really bad and the unemployment rate goes up big? Like what are the odds of that? Probably decently low, maybe 5 or 10%, maybe 15%. The odds of a, decent jobs report are much better than that, right? So from a pure risk to reward standpoint, the upside is a lot greater than the downside for Tesla stock. Now, eventually that will flip, right? Say Tesla does rally, the economy does weaken further, then the odds, of further upside or the risk to reward will change in Tesla. But for now, I do think for the month of September, there's more reasons to own Tesla here than to not. And as I said, heading into the end of this year, that's where things are going to get a little more on the dicey side. That's where I think earnings estimates are going to come into question, and Wall Street's going to say, just how strong is 2025 going to be? I'll take a listen to this interview on CNBC today from Adam Parker. He runs a momentum fund that invests in good momentum companies, so not necessarily fundamental based, but just momentum driven. And he's actually worried not really about a recession too much, but about earnings estimates just being too high overall heading into the end of this year, which I do think is an interesting perspective because he's still bullish on AI. He still thinks AI stocks are going to do well over the next couple of years. He's not an outright bear, but he's not that bullish on markets either.
The tension is sort of lying, and the estimates are high.
I mean, I see that, although I think that it's up for debate as to whether the stock market at this exact level is based on a premise of 200 basis points of cuts, right? It's based on the direction of travel is easing because inflation's taken care of. It's not clear to me that if we say stocks price out 100 basis points of those cuts right now, where we necessarily fall.
My reaction to that is that I don't know.
Yeah, nobody.
But I know the market is ahead of the Fed. Right. That I could say I'm pretty confident in.
The bond market is absolutely ahead.
Your comment was exactly why equities ripped in January of 23, because we knew we were kind of close to done hiking, and then eventually we would dream of accommodation someday. I think the reason it's tricky, and when I talk to institutional investors all day, it's because the last few times we've gotten the Fed to cut, it came with other goodies, fiscal stimulus, balance sheet expansion, and all of us, our era, have learned, don't fight the Fed. You're an idiot if you fight the Fed. Well, this time, maybe you do, because the market's really far ahead, and I'm not getting all that balance sheet expansion and incremental fiscal at the same time.
Well, we learned don't fight the Fed as a phrase,
right?
But in reality, people are saying, the first Fed rate cut, maybe you sell, because look at 08 and look at 2000, right?
So that's so I don't think the economy is going to deteriorate at the rate that requires 8 cuts and then also not see a growth scare to earnings that's a little bit more than we're afraid right now. I think that's why I'm highlighting. So I do think the defense stuff makes sense. If I want to get super excited about anything, I think we talked about it a couple weeks ago when I was on, it's probably healthcare. I know it's acting defensive here, the services and other stuff, but I think it could also act as offense in the next upcycle, just in terms of the ability to improve the healthcare system through technology.
We're glued to NVIDIA, and it has actually turned around and is now up a third of 1%. It's significant, A, because it's so large. Right, at 2 point what? Where are we? 6 trillion or something?
Yeah.
Market cap. And also so indicative of the mood around AI and Gen AI and what that's going to do to our future. At 107, it's still up 117% year to date, but has had a sizable correction. I know you're a strategist, but do you have to have a view on this stock, to have a view on the market?
Well, I used to cover semiconductors for a long time. That's when we met years ago. I think you have to have...
So what is your view on it?
I think you have to have context, right? I mean, the stock was $14 only 20 months ago, right? So the way I'm looking at, AI semis is it's a giant party and giant parties have huge hangovers, but the question is it still worth going to the party? Yeah, it is. Okay, it's going to be, a hangover, but if you bought this thing in the $30 or $40, $50 range, you're still quite happy to have doubled. Okay, so it was a great party, right? And is the trend of AI semiconductors over? Of course not. We're going to be way higher on this stock in 3 to 5 years than we are now. We're in a kind of cooling off period. Margins have peaked. Every time a company gets too big, the DOJ investigate. I mean, you have all that kind of stuff that happens every time. But if you're asking, is the general kind of trend of compute, all that comes with it, slowing materially? No, it is not. Right, so I think you still want exposure, and if you're a growth manager, what are you supposed to do? Say, hey, I'm running your money for you, Sarah, but I don't believe in the AI semiconductor trend, so I have no weight in semis? Of course not.
So with that said, let me know what you think about this information down below in the comment section. I wish I could be more, dead set on an outcome for Tesla here, especially following a day like today. Today was great for Tesla. It's a great sign. Maybe someone does know something that we do not. Maybe there is some leaked news to big money today. What we've seen lately in the markets would suggest that's probably what happened. There's probably some good news that we're going to get over the next 24 to 48 hours. I would not be surprised, and mark my words if that happens, okay? Because this was not just an outperformance. This was freaking jaw-dropping day in terms of what other stocks did relative to Tesla. I mean, look at Apple's down over 1%, Google's down half of 1%, Nvidia's down 2%, Amazon's down 2%, Tesla up 4 to 5% for most of the day today. That's kind of crazy. And like I said, I wish I could be more dead set on a potential outcome for September, but it really just comes down to this Friday's jobs report and whether or not that comes in weak or good. Let me know your thoughts down below in the comment section. Hit the like button as well as subscribe to the channel. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.